The markets that we have in Asia are pretty mixed. There's no big move coming through.
Redesignating KVS Manian as a joint managing director of the bank.
With the merger will come a preponement of loans on our balance sheet.
On the Bank Nifty, it is still not broken above the previous swing high, which is 46,892.
Deepak Fertilizers is in focus because the company has entered a contract, which is with Ethanol, into a long-term supply agreement for liquefied natural gas or LNG.
I think for the Bank Nifty as well, it's a slightly lower start, about 150 points, 46,385 or so is where that comes in.
We believe that as the urbanization grows, as income grows, the consumption trend should pick up.
The government is likely to urge all fintech startups to make sure that they are complying with the law.
The markets have already pulled back on their expectations of the Fed cuts pretty substantially.
Banks are doing well. The Nifty banking index is up more than 300 points.
Citi has maintained neutral call and target is rupees 430 per share.
Nearly 25% equity of the India unit changed hands in multiple block deals that took place this morning.
For the markets, there was a swift recovery that was underway, and the Nifty is up around 42 points.
Well, that is the day so far, and it is a quieter day as compared to the last many, and why not? So that's the day so far, but this is the hour which is coming right up. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant, with me my colleagues Rima and Surbhi. Guys, hi, afternoon.
Hi, afternoon.
Quieter day after yesterday's records, right?
But we're holding on to the green line, right?
Yeah.
That would make us higher for the 6th day in a row, and banks have come to the party.
1% move on the Nifty Bank, and I think HDFC Bank is starting to, I should not say fire, because it is not it's not on fire, but it's up. It's not, I mean, the 1350 sort of low which we saw the week before last is kind of, you know, in the not so distant past, but it's in the past. And we're at 1450 now almost, and that's the one which is powering the Nifty Bank with that 1% move. So just a couple of points. The Nifty is taking a bit of a break today. You know, I was just looking, the last 4 days from the low to the high, and this is all in the 4 days, the Nifty moved up 700 points. I'm talking about the intraday low to the intraday high, not close to close. Close to close is 350, low to high is 700. So it's not a bad kind of last few days. Support for the Nifty comes in at 20, it's a 20-day moving average basically, 21,728. This is the average as of yesterday's close. Bank Nifty is doing better, and as we speak, the Nifty Bank has creeped up and is now trading at basically the swing high, which is 46,892. We are at just at 47,000. So, you know, we've just now crossed it. At the day's high, we actually made we were higher. Then the Bank Nifty cooled off, but we're back there again. And of course, I mean, the US, which was absent yesterday, it's back today. And more than equities, I mean, I think the focus will be on yields, where the 10-year is at about 4.3 odd percent the last we looked. So, you know, that'll get the first chance to react to some more data points, etc. So that'll be interesting to see when we come back tomorrow. Rima.
Well, banks, as you said, are doing very well. The Nifty banking index is powered by a 2.5% rally on HDFC Bank. Axis Bank, Kotak Mahindra Bank also surging quite a bit. The other pocket of strength is power. So Power Grid is now the top Nifty gainer. It's up 4% today. This year, it's seen a rally of 21%, and the gains continue to come in for NTPC. On the losing side, you've got two-wheelers, and we'll talk more about it, but Eicher Motors, Hero, Bajaj Auto are under pressure. Coal India has also gone ex-dividend, so that explains the 3% fall you're seeing over there. And mid-caps, although the frontline indices are holding up in the green, there is that red on the mid-cap index, down about 0.25%.
Yeah, which is quite rare these days, right? Where rarely does the mid-cap index underperform the frontline indices, but that's what's happening now. By the way, this is interesting news that's flashing, and it's caused a bit of a positive stir in a lot of the sugar stocks. Let's pull up the intraday charts. Dhampur, Balrampur, Renuka, most of them, Bajaj and the Sun, all of these stocks are suddenly very excited. Now, remember the policy as of now. What they did was they started favoring procurement of C-heavy molasses, which has lesser sugar content, to ensure that they, as in by they I mean the central government, to ensure that there is adequate sugar availability, that, you know, the sweetener itself doesn't suffer, the production of it doesn't suffer. And then, if my memory serves me right, about a month back, the price of C-heavy molasses was also increased. So when refiners are buying C-heavy molasses from sugar manufacturers, the price was increased by about 6-7 rupees thereabouts. And now it seems our sources are telling us that there could be another review of this policy. We don't know, you know, in which way it goes. But basically, procurement of enough feedstock for ethanol while ensuring adequate sugar supply in the domestic market. That's clearly the agenda. And we'll see how this goes. Maybe some more sweeteners for heavy molasses procurement. Who knows? We'll have to wait and watch. But that's definitely got the sugar space excited. Otherwise, today on the PSU side, by the way, it's a fairly mixed picture. Must say that. While you have some of the names like Hudco and a couple of other larger PSUs, they're still holding out quite well. BHEL is up and about, for instance. Some of the PSU banks like a Bank of Baroda are still tracking some gains. You also have the profit taking on an SJVN, NMDC Steel, NHPC. So PSUs basically are presenting a very mixed picture today, unlike the trend we have seen in the recent past. So mixed hues for the mid-cap market, but the mid-cap index, by the way, is trying to recover. The cut is now less than 0.2% as we see things. So how should you position yourself as we get set for this last hour of trade? We have Rahul Mohinder joining in on the technicals. Rahul, thanks for being with us. So some consolidation, but a magnanimous move by the bank Nifty. What do you make of it?
I would say expected. In fact, in my interaction last week on the channel, I was mentioning that, stocks like an HDFC Bank, it looks like the first signs were there. And, I'm happy to see that it shaped up like we envisaged. And I think we will continue to see follow through. So I think the leader is going to be the banks. If you're someone looking at the next couple of weeks, I would say from an index perspective, like I said last week, the Nifty Bank is the space to look at. That's the index to be trading. The Nifty will probably still go higher up. And I mentioned 22,500 earlier too. I still think that, that's a target I'd kind of stand by. There's excellent support, around 22,000 on the lower side. So as long as that's intact, I think that trend continues to be locked in on a positive side. But again, when you try and look at what are those stocks that will help even the Nifty, the first one that probably comes into the list are going to be the index heavies, be it a Reliance or an HDFC Bank. In fact, I was also mentioning about ITC earlier on. That's a stock which hasn't yet clawed back on. But, I think a lot of these stocks which have had these sharp declines, they've got a little bit of a consolidation set up. I may be early on this, but I think you could go terribly wrong on it if you, went long on some of these stocks, even now, be it an HDFC Bank or an ITC.
Okay, thank you very much for that. Let's address the two-wheeler stocks. They are under pressure as the Vahan retail data indicates slower growth. TVS, though, is outperforming. Sonia joins in with the numbers. Sonia.
Well, thanks a lot for that. So, interestingly, the two-wheeler data that has come through, right, from Vahan up until 19th of February indicates that the growth is still very, very slow. So, the retail growth is just at 5% for the two-wheeler space in the first 19 days of February. And growth has moderated from 14% that we saw in January to just 5% in February. So that's a slowdown. In fact, Jan plus Feb till date year on year, the growth in two-wheelers stands at 11% year on year. The passenger vehicle data is even slower. The growth is just at about 2% year on year. But the stock I'm watching is TVS Motor. There's been a big outperformance that TVS has seen compared to the rest of the auto industry. It is sitting at a fresh record high as well. This is because market share of TVS Motor is rising, astronomically in the electric vehicle space. So just take a look at this. In FY18, TVS Motor had 2% market share in the electric vehicle two-wheeler space. And today, in Jan of 2024, the market share has risen to 18.7%. Now, this rise is purely because of one product, which is the TVS iQube, which has now become the fastest selling electric vehicle in the two-wheeler space. iQube has helped TVS Motor become the number 2 EV OEM in this space after Ola, which has a market share of over 30%. TVS now has a market share of 19% in this space. In fact, we'll just take a look at the electric two-wheeler market share as of Jan 2024. Ola tops the charts with almost 39.5% share. TVS Motor comes second at 18.7%, Bajaj Auto at 13.2% and Ather Energy at 11.3%. So, the astronomical rise of TVS Motor in this space is really something that auto enthusiasts are sitting up and taking notice. The only problem I feel is the valuation picture. So, just pull up the, the stock as well for you. I'll tell you quickly on the valuations. It's trading at 39.7 times FY25 and 34 times FY26, which is well above its historic average and much above peers like Hero and Bajaj, which trade at about 17 to 20 times. Back to you.
Okay, thank you very much for that. Deepak Shenoy, founder at Capital Mind, is with us on the show. Deepak, first, you want to comment on the slowness that we've seen in the two-wheeler retail sales in the first 19 days of February at just 5%, and then on TVS Motors.
So I think, Rima, the issue in retail sales per se is, it's not really reflective of what companies report because they typically report dispatches. So these sales may be because of earlier buildup of inventory, which is only getting replenished now, and therefore sales are a little bit slower, or it could be a bunch of other reasons relative to this thing. But expect, of course, in the next few months that these data will change because you're getting into an election, and a large amount of election expenses are in the hinterland, the parts of the country that are traversed largely by two-wheelers. So I'm expecting to see a lot more retail sales figures starting to happen after April and May, probably after April itself, when there will be a lot more activity in terms of campaigning and so on. That usually tends to be a relatively high number. So I wouldn't read too much into the Feb data so far. It may actually be related more to dealer inventory than it is to actual retail numbers, though we've had a good run recently on all the stocks in the two-wheeler sector. In TVS Motors specifically, I think what you mentioned from the electric vehicle perspective, that is something that is obviously driving them. The change in the FAME subsidy rules affected a bunch of the startup players and some of the other companies as well. Therefore, there's been some kind of change in that as well that has affected TVS Motors relatively positively. But I feel they're a very strong company. We used to own them, and of course, the price has gone up considerably from even when we exited, although we made a fairly good return on it. I feel here that perhaps one has to ride a TVS motor on momentum. In fact, all of them, I think Hero, Bajaj, and TVS are quite strongly in momentum on the price charts at least. So that's probably what should drive an investor's interest right now. The fundamentals haven't yet followed some of the other companies, though I expect that the quarter Q1 numbers for next financial year, the June quarter, that will be a good number primarily because of these election-based sales.
Okay, that's the two-wheeler space. Lots of competition there on the electric vehicle side for sure. Good to have you on the show, Deepak. Great to have you here this afternoon, as always. Just wanted to get your thoughts in on Kotak Mahindra Bank and maybe a comment on Federal as well, if you can throw in one. I was just looking at it, sometimes it gets overshadowed by all the negative headlines on HDFC Bank, which of course is the worst performing large cap blue chip private sector name. But Kotak is the second worst performer. Whether I look at the 2024 rankings where Kotak is down some 7-8%, or even on a one-year basis, the second worst performer in the private banking space is actually Kotak. A management change, of course, rarely changes anything. These are well-run machines. But your thoughts on what we've seen and the fallout that we've also seen on Federal because of these announcements last evening?
Oh, I'm sorry. I don't know what's happened in Federal since last evening, so I haven't tracked that.
Well, the new joint MD at Kotak Mahindra Bank, Mr. Manian, there was a lot of buzz in the market that he would otherwise head Federal, which clearly is not happening right now. To fill you in.
Okay, that's okay. That's been coming for a while. So so we have some small position in Kotak as well. The problem here, I think, is the fear of what's going to happen after the management change, and therefore maybe a reshuffling at some of the top players as well. Is something that's driving the fear that perhaps this bank will not perform as strongly as before. They were decent results, so it's not like the results are bad. In HDFC Bank's case, the results were actually quite negative for them. So I think some of the downfall there is kind of justified. I would feel that it'll take longer for them to come up. Kotak does not have the same kind of issues that HDFC Bank does, but it does have an issue of two layers. One is the ability and the confidence for the new management to kind of for management right now to kind of pick up confidence at the investor level. mostly at the institutional level here. And secondly, the collapsing or falling NIMs across the industry, because you had years in which loans were repriced first, so NIMs expanded, and now liabilities, which is their deposits and so on, are getting repriced. And with the advent of technology, their CASA will continue to fall. I think this is going to be industry-wide, but banks like Kotak will get affected slightly disproportionately because of it. When CASA ratios fall, your NIMs effectively contract. Because you're going to pay more for deposits, and then your CASA ratios are relatively at much lower deposit rates. So FDs are at a higher rate. So you're going to see a little bit of compression of NIMs. I think those are things that we should watch out for. Longer term, I think this is a solid bank, one of the strongest on the street. So I don't think credit is an issue here. It's probably just perception and liquidity.
Okay. All right, no, absolutely got that. Power Grid is the other one, Deepak, that is moving, right? It's a top Nifty gainer right now. There's a Bernstein note. Vivek is standing by with what Bernstein is saying. Vivek.
Well, that's right. A very interesting note coming in from Bernstein on Power Grid today. They've initiated coverage on the stock. They have an outperform rating. They believe the target price is fair value is closer to 315 rupees a share. What they're saying is that Power Grid, number one, remember, according to them, is a low beta stock, 18% ROE, 8% PAT growth, as well as very strong governance metrics. Along with that, a simple price to book calculation, according to them, implies a fair value of close to 3 times price to book. And they believe the stock is currently already trading at close to 2.7 times price to book. Now, they have 5 key reasons for which they like Power Grid. The first reason, they say the interstate capex, which so far was close to 11,000 crores per annum, is all set to rise to almost 25,000 crore per annum between FY25 to FY30. So significant transmission capex outlay is the first point. Secondly, they're saying new growth areas could happen. Number one, from intra capex spends, also the company getting into batteries, and the third, smart metering opportunity that Power Grid is participating in. Now, the third key point is they're saying the shift towards complex projects as far as transmission is concerned plays in the favor of Power Grid, given the fact that it's the best place to win these complex awards. Fourth, the company already has access to steady cash flow from existing assets and also has access to low cost of debt, 7.7%, versus its peers, who have to borrow at over 9%. And lastly, there has come in certainty regarding regulatory tariff norms, now at grandfathering assets at 15.5 times. There was a bit of a worry, in terms of the draft tariff norms coming in, slightly lower this time around, but it's been maintained at 15.5% ROE, and that is something they believe is quite positive for Power Grid.
All right, Vivek, thank you very much for that. Deepak is still with us. Deepak, I don't know if you have a thought on Power Grid, but I also wanted you to comment on Z, which is up 10%. I mean, there's been very clear statements from Sony, and essentially the statements all indicated that the deal is, done, and they're actually going after each other for compensation, etc. Now, of course, there is a news story which says they could try for something again. For viewers who are watching, retail investors, I don't know, how to approach this one. Just want retail not to get sucked in if nothing materializes, because to my mind, so far the way it's been going, it's not happening. It's very, very clear. Go on.
Sure. First, thanks, Prashant. I think I'll cover thanks for bringing Power Grid to my notice. I haven't looked at the company for the longest time. I think quite interesting. The numbers and the numbers actually seem quite changed from the time I last saw it. We're talking about returns on equity right now at above 18-19% in the trailing 12 months, and then possibly higher numbers going forward because of transmission growth, which I'm quite positive on. So I'll defer my thoughts on this one, but it looks quite exciting to me. So I'll have to come back with more with more data on this. But on the Z side, here's the thing. I think the problem here is this. We think that because the Sony deal is over, the company is close to or nearly dead. But I think that's not true. I would say it opens up the round for another layer of acquisitions or another third-party deal if the Sony thing does not take place, because promoters own only 4% of the company, and therefore it is quite open. I think a lot of institutional players who hold stakes also are quite open to giving that stake over to someone else who can take over. The Sony deal did not work out because of a specific clause that the Z promoters don't like, which is to not have the Z promoters in that business at all. And I think that will remain a sticking point regardless of whether that happens now or it happens later. So at any time, the fear or perhaps the excitement in the street may only be of a hostile takeover by a third party or an attempted takeover by a third party, despite all of the other stuff that has happened. I think, like you've said, you should not get suckered in because there are lots of reasons why you should not expect that a deal or resolution will happen very quickly. There could be poison pills in place inside of Z, which we don't know about, which we'll find out about later, and those will defer the interest in any third-party acquisition in a hostile way. There will also be more negotiations with Sony, even if they were to come back to the negotiating table. I don't think Sony is going to kind of give up so easily. And given all these things in place, I don't think anything's going to change for the next 2 or 3 years. Much as their market share used to be quite high earlier, I don't think they retain quite as much now. And therefore, a declining business in a way with potential, management, not being very happy with any hostile takeover. I think we should not just jump the gun and, try to make assumptions about what's going to happen here. Though I feel this is going to be more interesting. Maybe the media about Z is going to be as interesting as the media on it. I'm sorry, I'm saying that just as this thing, but I think it's going to be a very interesting story in the next 24 months.
Okay, Deepak, and we'll come back to you for Power Grid maybe in a couple of weeks to find out if the increasing ROE makes the cut for you to purchase. But we need to slip into a very short break. But just some stocks. Zaggle Prepaid continues to inch higher. Now it's 16% up. Very large volumes. Logistic companies like All Cargo Logistics, 14.5%. Snowman Logistics is up close to about 12.5%. Deepak Fertilizer has been steady through the morning with a gain of about 5%. And Park Hotels is seeing some solid buying. Recent listing issue price was 155 and the stock in a matter of days has rallied to about 213, and a few PSUs like MMTC, SCI are up nearly 5%. We'll get into a break. We'll continue our conversation with Deepak. We'll also invite Karthik Kumar, fund manager at Axis Mutual Fund, on the other side. Stay tuned. Welcome back. Let's now turn our attention to the pharmaceutical space. Sudarshan is joining in with some fresh brokerage notes on Glenmark and Biocon. Sudarshan.
That's correct. So I have two brokerage reports from pharma sector. One is upgrade and another is downgrade. First, I will talk about the upgrade. HSBC has upgraded Glenmark Pharma to buy from hold, and target is raised to 1100 from rupees 960 per share. HSBC says Q3 was a disrupted quarter on back of restructuring of distribution model. Recovery in India sales with lower R&D spend bodes well for margin expansion, and Glenmark Life Science deal closure is a near-term catalyst. Jefferies has downgraded Biocon to underperform from neutral, but target is unchanged at rupees 250 per share. Jefferies says earnings downgrades will continue due to lack of new launches in the biosimilar segment. Weak free cash flow generation and higher leverage will hurt unless company looks at fundraising options. Jefferies believes company can look at fundraising options like stake sale in biosimilars and Syngene.
Thank you very much for that. Deepak, I remember from our earlier conversations where you said pharma is promising, but you've still not bought in. This was about a month back. Have you changed your opinion, and particularly on Glenmark Pharma, where there is that HSBC upgrade? Does it look tantalizing to you, and Biocon?
No, actually, we haven't yet decided to go in. I think some of the things that we thought about have started to play out, as in there's going to be more activity from the FDA. Some of it is going to hurt some of the players here negatively, and we continue to see a challenge in business in export from the West. So while it's an interesting theme, I'm finding better stories in India that target the Indian market from a domestic consumption point of view, even in healthcare, in the hospitals area, and in a bunch of other infrastructure and manufacturing sectors. So we don't find pharma very attractive at this point. It may be good for a longer term play for someone whose focus is purely on pharma, but I think we just seem to have better opportunities elsewhere. We haven't looked at Glenmark in the recent past. Biocon, I think I agree a little bit that headwinds are higher here across the board, even in biosimilars. And therefore, it's going to be challenging for the company to retain a stock price that's growing in the face of headwinds like this, and general sectoral headwinds as well. So I don't see this very favorable right now for pharma, even now to invest. So, maybe the triggers are ahead of us. We'll probably never be in first because we'll always probably get in after, the real bottoms are in place. But I'm happier to get in on a rising tide than on, trying to bet the tide will rise in the future.
What about Whirlpool? Now, Whirlpool's stock hasn't done anything, Deepak, in the last 1 year. It's absolutely flat. Today, we had the big block deal where we understand that the promoters have sold their stake to the tune of about 24.5%. Now, the promoter holding after this will still come down to 51% because their holding is 75%. But was this a big overhang in the market? Because the promoters did indicate, Whirlpool Mauritius, that they want to pare down their stake to lower their debt. Now that they have done that, was this something a bit of an overhang and you could see the stock do well from here?
That's interesting. I mean, the Indian Whirlpool does not seem to have much debt. I haven't analyzed the company, to be honest. They haven't performed very well in the market either. So I don't have any comments on the deal right now. But the fact that they've sold 24%, that's quite interesting. I'll have to look at this a little more. I'm sorry, I don't have any comments per se. I don't even have context about the company. So, I'll look at it a little more and maybe consider it. But, right now I have nothing on this.
Okay. Okay. All right, Deepak, thanks for that. Well, let's look at some interesting analysis that our colleague Hormaz has put together. It's been a solid D-Street debut for one specific stock, Vibhor Steel Tubes. And guess what? This stock is right now trading at a 190% premium to its issue price. That's quite a bumper debut. Let's bring in Hormaz to understand more, is it steel tubes or is it some rare earth or is it gold or is it tubes made of diamond, one would imagine. But, that's on a lighter note. Hormaz, fill us in. What's really worked so well for this listing?
regardless of whatever it is, the investors are laughing, dancing, whatever adjective you'd want to put it, their way to the bank for sure. And 190% listed at 180% premium, then went up some more, then 195%, then a 5% circuit. So it's almost tripled now from its IPO price of 151 rupees. Now, this isn't in fact the biggest listing that you have had in the country. Sigachi Industries, which made its debut only recently, had a listing gain of 250% and then went up even more. So that is one thing that you need to keep in mind. Vibhor Steel had a 181% listing gain. Latent View, which is the most subscribed IPO in the country in history, had debuted with a 169% gain, and Paras Defense, which also debuted in the same month of October of 2021, had a 168% listing gain. But what you need to keep in mind also is that Vibhor Steel had a IPO size of only 72 crores. So it's a very small IPO, and hence the number comes across as an extremely elevated one. That also does not take away from the fact that there was no interest in the IPO. Of course there was, but since it was a smaller IPO, the subscription number comes out that much higher depending on the interest. Now, what does Vibhor Steel do? It is a producer, exporter and supplier of steel pipes and tubes to engineering industries. It intends to utilize the IPO proceeds for working capital and general corporate purposes. That entire 72 crore IPO was a fresh issue, and it renewed its agreement with Jindal Pipes on the 1st of April last year, which is a big positive for the company because it is a 6-year agreement and which can be extended further as well. Now, based on this stellar debut, the current market cap of Vibhor Steel comes up to around 850 crores. So still a relatively smaller size. It's a big day for those lucky few who did manage to get the allotment. The stock tripling from its IPO price.
All right. So that's thanks very much. Interesting name, small issue, but big gains are coming through on that one. I think we have our next sort of guest with us on the program. Karthik Kumar is fund manager at Axis Mutual Fund. Deepak, of course, is still with us. Karthik, good afternoon. Good to have you with us here. Prashant this side.
Prashant, thanks for having me on the show.
Talk to us a little bit about, the funds that you manage, and how much of it is, is it? I think a lot of it is on the ETF side, on the passive side, but there is some active fund management as well. Just run us through what you do at Axis.
Okay, so I essentially manage the Axis Quant Fund, which is a completely active offering where what we do is the process of stock selection and sector allocation is done using quantitative models. So that's a complete offering. Aside from that, I also manage passives and the arbitrage strategy. But within Axis Quant, right now, the way we are positioned from an active perspective is that we are bullish healthcare, we are bullish autos and power plays, whereas we continue to remain slightly underweight tech, big banks through financial services and commodities.
So quant would mean, momentum, relative strength, things like that, Karthik? Or
so quant is essentially through quant what we intend to do is we intend to invest in a portfolio of what I call as QGARP, which is quality and growth at reasonable prices. So what we do is we evaluate all the stocks in the universe based on these three parameters, which is quality, growth, and valuation. For quality, we look at historic data. For growth, we look at growth prospects over the next couple of years to see what is the level, what is the trends, how are the trends changing, and so on and so forth. And we take valuation into account to make sure that we are not overpaying for our investments. So to that extent, so once we have the total rank of a company, that becomes an indicator for future returns. Higher the rank, higher the expected returns, and that has a say in what is the weight of the stock in the portfolio. Obviously, we combine it with other risk parameters that ensure that the portfolio risk remains within constraints, but this is largely how we manage the portfolio. At the end of the day, it has strong fundamental roots because what we want to do is quality and growth at reasonable prices, which even a traditional fundamental manager can aspire to, except that we are doing it through a rule-based approach.
Karthik, hi, good afternoon. So since we're spending some time understanding the quant strategy, before we talk about your holdings and preferences, just a follow-up question on this. A lot of AMCs, a lot of fund houses are now developing quant-based strategies, right? So what would you say is the differentiator? Like you mentioned, quality and growth at reasonable price. How would that sort of, be different from, let's say, what else is on offer? And And how do you see investors sort of reacting to quant strategies over the traditional, active management strategies that one has?
Okay, great questions. Essentially, just like there are no two growth managers are same, or no two value managers are same. Similarly, no two quant products are exactly similar either. So while designing the quant process, that is where the input of the research team comes into play. And depending on the house, you could have a quant product that's, like in our case, it's growth and quality at reasonable prices, or you could have a quant product that's completely tilted towards value or quality. So the way you develop the product is a function of the team and the house and the house that is working on it. So that's the first difference. Second, with regards to, and that will have repercussion on how those portfolios come together and what points they work and what points they don't. So that has an impact on the portfolio cycle itself. Now, coming down to the category itself, the category is quite new to our markets. So our fund has been in existence for almost 3 years now. We are one of the longer funds in the space. And as you rightly pointed out, a lot of companies AMCs are launching funds in the space. So there is a category building process that needs to be done in this segment. But having said that, because this category is new, there is a lot of unharvested alpha, so to say, that early investors can take advantage of.
Karthik, afternoon. So we have some of your key holdings, the top 10 holdings for your quant fund. And they're all the large caps. But I'm just curious, which are the mid caps which have made the cut, quality and growth at a reasonable price? So which are the mid caps that you hold in your fund?
So we have a good mix of actually large, mid, and small. So we've around 60% large cap, around 20 to 30% large cap, and around 15 to 20% small cap. And so while I can't talk about specific names here, but we've got reasonable exposure to mid caps and small caps through select plays in FMCG, select exposure. While we remain underweight in IT, our exposure to within that sector largely centers around mid cap and small caps as well.
Deepak, you run a quant fund as well, right? Deepak?
Yes, we do. Yes, we do.
You do, right? And it broadly gels with what you heard from Karthik in terms of
I think the concept of using factors to determine stock price, stock portfolios is not new. It's been there in the world. I think since the 70s there's been research on this. In India, what we've found is what seems to work the most effectively is momentum. So we have a momentum fund in the PMS where we use the stock prices and volumes with, of course, enough filters to allow for us to be able to take positions. So stocks that have enough liquidity seem to outperform the market over longer periods of time. Of course, momentum comes with its drawbacks that sometimes markets will be flat and sideways and momentum won't perform as much. But if you look at most 3-year periods, 96% of 3-year periods since we've tested the data, momentum approach has beaten the Nifty considerably. So we find that that approach works. Of course, there are value approaches. There are a mix of value, quality, and some of the other factors, including low volatility and so on. You can, if you look at Bloomberg terminal, you find like 140 different factors. But we've tested a lot of them in-house. We've built a lot of code to test and back test in more practical scenarios. We found momentum works the best. It's done really well in the last 1 year. So, I won't say that, that's the indication of what's going to come. But I know that I've been a personal investor in it for 5 years plus now. And I think, we've had a very, very good run in comparison with the markets.
Absolutely. By the way, guys, last 5 minutes, 50 points on the Nifty. Pull the Nifty up, the intraday, and you'll see what I'm talking about. Full 50 in the last 5 minutes is what's come through. And it's not Reliance. Reliance also has picked up. I mean, everything would have picked up a little bit, but I think it's HDFC Bank. If we can have that up briefly, maybe it'll give you a sense of how HDFC Bank is moved. It's up at the high point of the day now. So that is the number one contributor. By the way, 66, 67 index points in the Nifty are coming from HDFC Bank. Pull up Axis Bank, which is adding about 16 index points. And then there is Power Grid. Power Grid was up from the beginning. We, of course, heard from Vivek on Bernstein there. And there is Kotak Bank as well. So private banks, throw in ICICI Bank. So private banks are coming alive. That's the part of the market which, really everyone liked, but I guess nobody wanted to buy for a while. Or maybe everybody owned it enough. But there is an incrementally buying coming through, and the prices are moving up. Most definitely. NTPC, L&T, HUL are some of the other movers. Surabhi.
I think they took the cue from Deepak. He said he believes in momentum strategies, right? And that's exactly what this market has been all about, momentum and more momentum. Karthik, so to round things up, and if you could hear the other guest there, Deepak was talking about factor-based investing, right? So a lot of these strategies are actually on the passive side, smart beta strategies, right? You combine a quality with a momentum or with a low volatility, etc. You combine different factors. And now the exchanges have created lots of indices along these lines, these strategies, and then you have sort of funds on them. So how does, so there's passives on one side, and you do manage a lot of passive funds at Axis as well. And then there is the quant fund, which is actually an actively managed fund, right? So between the two, where do you see the evolution, and where can investors expect better returns?
So it's not one or the other. There needs to be allocation to both the passive space and the active space. So for years, in years where the breadth of the market does extremely well, active management tends to outperform passive management. Passive management typically, given that the weights are skewed in favor of the market cap, passive management tends to, passive funds do well when the market moves are concentrated in a few set of stocks, like what you're seeing in developed world today. But whereas in our case this year, where the breadth of the market is doing well, active funds tend to do well in such a setup.
Okay, so finally then leave us with some of the top, sectoral preferences that you have at this point. I know you can't get into stocks, but at least top of mind, the 2 or 3 themes that you're most bullish on for the next, say, 12 months or so.
We continue to remain bullish pharma. And within autos, we remain bullish on two-wheeler plays and auto ancillaries. We also continue to remain bullish on power plays. And lastly, on FMCG, there are select names where they are able to drive better volumes than their competitors. So we remain selectively bullish on FMCG plays as well. The areas where we remain bearish are tech. We still continue to have have less exposure to the large banks, and we stay light on metals and minings as well.
Okay. All right, Karthik, good having you on the show today. Thank you very much. We'll thank Deepak as well on that note. Thank you both for joining in and taking us through the last hour. We're down to the last 20 minutes. Deepak, you have a good afternoon, and we look forward to connecting again soon. All right, let's focus on that story that we had a while back on the sugar space. As our ticker was alerting you, sources are telling us that the cabinet the cabinet secretary could perhaps hold a review meeting on ethanol this week, and it could be looking at the sourcing feedstock between sugarcane juice and C heavy molasses and B heavy molasses and so on and so forth. Manisha is here with more details. Manisha, what are you picking up?
Well, thank you for that. What we are picking up from sources in the government is that the ethanol review policy meeting could be held this week itself. Remember, it was in mid of December that the government had curbed usage of sugarcane juice and also molasses within making of ethanol there. But we do understand that there was also said that there would be a review meeting every month for this. Well, January came and went and we did not see a review meeting. It is almost Feb end and there's a review meeting now being planned onto this one. The markets have been waiting it for some time now. Just to alert you that in last year, the divergence of sugar into ethanol was to the tune of 3.8 million tons. This year, it has been curbed to 1.7 million tons. So the whole blending target seems to be getting all over the place. In 2023, the blending that we achieved was at around 12%. The target for 2024 in sense of blending has been 15%. But with the way the tenders have been issued at almost 2.6 billion litres, and what we have seen being tendered is just about 1 billion. So that would clearly not take you to the target targets of 15%. The industry actually tells us it could be much lower than last year as well and could fall below 12% of a blending target or numbers as well for 2024. Remember, there also is a target of around 20% blending of ethanol in 25-26. So that is what the street is really worried about. And the government is finally coming on board to get a review meeting done on this. Well, if you look at the sugar carryover stocks, those stand at around 8 million tons. Now, the need or requirement for this is 6 million tons. So you are in excess of 2 million tons in sense of carry forward stocks. Now, whether government allows this to be diverted into ethanol or does it allow some bit of an export as well is what the industry really seems to be speculating on. Apart from that, the industry also is looking at a proper formula-based policy when it comes to ethanol. So that is something that has been an ask for a longer time now. It's going to be quite interesting on what we see in sense of meeting in this week and what all comes out of that.
Okay, thank you very much for that, Manisha. This is going to be an important meeting to track. We'll get into a break. On the other side, we'll get you a few BTST calls from our technical experts. Stay tuned. Welcome back. 22,200 on the Nifty, and a large part of it is to do with HDFC Bank. The Nifty is up 83 points, and out of that, 67 points is courtesy the up move that we're seeing in HDFC Bank. HDFC Bank is now moved to a gain of about 2.7%. There you have it. A bulk of the rally is HDFC Bank, 67 points out of the Nifty rally of 86 points. And if you add up the contribution from the rest of the bank, it would explain the sensex up move. But 22,200 conquered on the Nifty. It's a fresh record high. Mid caps, though, are still in the red. The mid cap index is down close to about 65 points. Hormus is now waiting by because in the last 12 months, we've seen several MNCs dilute their stake in the Indian entity. Hormus is standing on the wall with the key details. Hormus.
Well, you know, this MNC promoter stake sale trend has been ongoing for the last 12 months or so. And today we've potentially seen another one this morning. And I'll start off with that, which is Whirlpool, where nearly 25% equity of the India unit changed hands in multiple block deals that were worth over 4,000 crores. Sources believe that the promoter entity is the likely seller here, as they had 75% in the company as of the December quarter. Now, the company had made this announcement in November of last year, where they said that Whirlpool Corporation, which is the parent entity, it intends to sell up to 24% stake, when it intends to use those proceeds to repay the debt that they have. Now, well, this isn't the first such transaction. As I highlighted earlier, there have been plentiful in the last 12 months. And in August of last year, GMM Pfaudler's parent had sold a 13.5% stake in the company via block deals. And post this, the parent shareholding in the company fell below 1%. Same is the case with Timken India, where the parent sold an 8% stake in the listed entity via block deals in June of last year. And incidentally, that happened on the 20th of June. And in the 8 months since that day, the stock has declined 13%. So it's been an underperformer during this period. Thomas Cook is another one where promoter, the Fairbridge Capital, offloaded around 8.5% stake last November through an offer for sale. And lastly, Gokaldas Exports saw its promoters Clearwealth sell 10% stake in March last year, and the company had to say that they don't have an intention to sell any further. Now, that's not all. There is more on the anvil as well. Now, we reported last week that Novartis AG, the parent of Novartis India, has initiated a strategic review of the 70-odd% stake it holds in its India unit. Companies like Dr. Reddy's are in the fray for the same, according to sources. The developments that the company has termed as market speculation. Now, reports are also suggesting that Sumitomo Wiring is looking to sell around 14.5% in Samvardhana Motherson as well via block deals. Now, that's on the stake sale bit. Now, if one looks at the valuation picture, there is a huge discrepancy in the valuations of the parent company and the Indian unit. Take a look at this, Whirlpool. Now, the stock has done nothing over the last 5 years, absolutely flat. But the Indian unit is still trading at almost 44 times FY25 price to earnings. And in comparison, Whirlpool Corporation, the parent entity, is trading only at 7.5 times. Not that the parent has done any better over that 5-year period. That is down 25%. And the story is no different for Timken India. The India unit trades at around 48 times, the parent trades at 12 times, although in this case the Indian entity has risen almost 400% over the last 5 years, while the parent has gone up around 85% over the same period. Now, even Novartis, where something is still on the anvil, the Indian unit is trading at 27 times, the parent is trading at 13 times. A common thread in all of this is that all of these Indian entities, none of them are trading at a PE multiple of less than 20 times FY25 earnings. Now, to sum up, the MNC promoters have also made merry selling their stake in their Indian entities at lofty valuations. Now, whether the Indian participants here have fallen prey to FOMO or taken a calculated risk, well, time will tell us that.
Okay, thank you very much for that. The question is, which Indian stock is now available at less than 20 times? But interesting data there, Hormus. Rahul Mohinder is now with us for a few BTST calls. Rahul, afternoon, the Fin Nifty expiry that's playing out today, you're seeing the move in the Nifty Bank. The Nifty Banking Index now has a move or a gain of close to about 570 points. How much of the gain would you attribute to the fact that today is Fin Nifty expiry, and thoughts on the index and your trade?
I think the Nifty Bank, I would say has been looking pretty good, as I was mentioning. And I'll just extend the argument a little further. I don't think it's really the expiry playing that much of a role. It's the fact that there's a lot of opportunity within these banking stocks because a lot of them have had a good decline. Whether I talk about a Kotak Bank, whether I talk about an HDFC, I think people are starting to recognize that, these stocks came to strong support levels. And technically, one has seen the right trickles of volume over the last 4 or 5 trading sessions, once they've sat at support levels. So I'll continue by saying that, yes, if you're looking at the banking space, I'd say go with some of the heavyweights, even an HDFC Bank 1500 to 1510. That's the next hurdle. That's the next target that I'd be looking at. I'd say that, Kotak has a bit of a barrier at about 1780, but clearing that, I think it should again do well. Again, watch the fact that Kotak Bank did make, a double bottom at around the 1690 level. So there's been some good base building within this space. For that matter, let's move this further. ICICI Bank, another stock where I think we should be moving to about 1,065 targets. But again, banking is not the only sector within the list. There's a power grid, there's a dish TV, some, excellent, reasons why these stocks come to the radar is because these price moves have been accompanied by not just breakouts of resistances, they're also accompanied by fairly good volume. So a stock like Dish TV, I'd say a bit of an aggressive call considering the rally. We could be even headed to levels of 29 to 30. So if you are, trying to get in with a 2260 stock, still worth it. A power grid could move to a 297. With the 282 stock you could get in. So, range of ideas in my head, right?
Okay, all right. Rahul, good to have you today on the show, and thank you for all of those ideas. We look forward to touching base again soon. Well, we're down to the last couple of minutes of trade. We do have to take a very quick break, and then we'll get chatting with Jay Bala of Cash the Chaos to get some more ideas on the technicals. Welcome back. Well, as promised, let's quickly get that conversation going with Jay Bala of cashthechaos.com. Jay, thanks for joining in. So the markets are managing to move higher and higher, fresh all-time highs. And today we've got this nice leg up on the Bank Nifty as well. What do you make of things, and what are the levels you're tracking now on both of these indices?
Hi, Surabhi. Good to be here. See, the important level for the banking index is 47,100 to 47,700. I think that's the max for this counter-trend rally for the banking index. And as I've been pointing out, as long as Reliance has got an unfinished up move, and it still has got, the market could still, try to push higher. The markets in the Nifty could push higher, but the banking index is most probably staying below the all-time highs. And so the levels for the Nifty is this is about 22,240, 22,500, and the most important risk for the overall market is coming from Brent. I know if we see Brent sustain about 84.75, 85.25, I think we have a serious problem at hand. That's not my primary view, but watch out for this. I would like Brent to come down to below 58 in the medium term, But if it were to sustain above 84.75 to 85.25, I think we have an immediate up move towards 96 to 100 plus for Brent.
You want to tell us some of the stocks which look attractive to you?
Yeah, I have on the bullish side, I have Ultratech, and it needs a little bit of corrective move to complete, somewhere closer to 9,500. I believe that will hold. That's a very significant support for Ultratech. 9,500, if it holds, I think it's heading for 10,900 to 11,400. I'm slightly bearish on Titan. If Titan were to break today's low, I think the low is about 3666. If that were to break, I think we are looking at a drop towards 3,400 to 3,200.
Okay. On HDFC Bank, what's the call? It's after a long time that we're seeing some, stirring of life, but I don't know if it's a non-starter or whether this is an indicative of some sort of a bottom being formed.
You have to take a look at the medium-term picture of HDFC Bank so that you can get a better idea. This looks what the top we saw for HDFC Bank last year is probably a significant medium-term top, and what we are seeing in the short term is just a short-term bounce, and it's very near the short-term resistances. From a medium-term perspective, it can drop much lower, but from a very short-term perspective, limited upside to work with.
Jay, thank you very much for joining in. Counting down to markets close, and a last 1 hour spike helped the Nifty close at fresh record highs, closing in the green for the 6th consecutive day, and the Nifty is above 22,200, another milestone scale. 80 points on the Nifty, sensex up 350 points, and a bulk of the heavy lifting. Perhaps, single-handedly, it's been the banks which have lifted the index up. The Nifty banking index going home with a gain of 600 points.
Well, that's a big move on the bank Nifty coming through after a long time. And apart from that, you had Power Grid, which was in the leadership position on the Nifty. Gain of over 4% on this one. Some more PSUs actually, NTPC, BPCL, managed to have a good session as well. Then you had the likes of, by the way, since I'm mentioning PSUs, thrown a ONGC as well onto the list. L&T contributed to an extent. Some of the life insurers like HDFC Life and SBI Life had a good session. So this is basically the list of the gainers. On the losing side, two-wheelers, profit taking on both Hero Moto and Bajaj Auto, as well as Eicher, actually, all three of them. And there was a weakness, second day running on technology today. All your large cap names, Wipro, Infosys, TCS, all of them down between 1 and 2%. But interestingly, the mid-cap market is now, is closing with a tinge of red, just about 40 points lower on the mid-cap index.
Guys, it's almost exactly the opposite of yesterday. Yesterday, last 30 minutes, there was a 60-point sell-off, and today, last 30 minutes, there is a 60-point move up. The broad trajectory has been up, slowly, haltingly, sometimes with very few pullbacks, small pullbacks, but just marching ahead and sort of fighting the odds. That's essentially been the story. Now, just a few more names here in the broader market. Federal Bank, of course, was the big loser with volumes as well. MRPL saw some pullback today. There's MRPL now. Biocon, which is the other name, where there's a downgrade, I think, one of the brokers. The reinsurer, which is GIC RE and New India Assurance, the general insurer, both were down sharply. BEML sold off a little bit. There was Action Construction Equipment. JBM Auto, again, has seen sharp gains recently. Schaeffler India, SH Kelkar were some of the other names which saw some pressure. Home First, some of these moves are really reversals, nothing else. Home First, for example, yesterday sold off 7%. Today it ends up 5-6%. So just coming up. Taj GVK continues its momentum higher. I think another 10% today. Gensol, post-split, bonus, everything, it's still a huge winner. Senco is another one which has done well. EID Parry was another one. There was Z, Zaggle, All Cargo, just to name a few others as well. So that's basically the market for you. Can't complain. Nifty up. Actually, the Nifty was not doing very much. Bank Nifty was, and by close, both Nifty and the Bank Nifty pretty much at the high point of the day. It's a wrap on this edition. A closing bell from all of us here. It's goodbye. Thanks for watching. But markets forward will pick up on all the action in just a bit.